Hey traders, welcome back to the channel. In this video, we're going to talk about multi-time frame analysis. So, when you're looking at the chart, sometimes you feel, in 3 hour chart the market is going down, but in daily chart the market is overall going up. And then you go to 4 hour chart. When you go to multiple different time frames, every chart has a different story to tell. So which one do you actually follow? So in this video, what I'll show you is how to use specific time frames so that you don't get caught into the overall trend, the major trend, or you're looking at too smaller of a picture to be taking a trade. So what you need to know is what is your time horizon for your trading. That means if you are going to be trading in, let's say, okay, let's say you have a time horizon of, let's say, 1 day to trade. That means you're looking at a very smaller picture. So you're looking at maybe 1 minute, 5 minutes, or 15 minutes, because this is where you will have your opportunity to take trades within the day and exit maybe at the end of the day, or maybe 1 day or 2 day. If you want purely you want to be trading like in the morning and out in the night, then you should go to 1 minute or 5 minutes. This way it will give you ample opportunities during the day, or to take positions at a specific price and then ride the trend. Okay, because if you have 1 day, you can't be going to 4 hours or one daily chart to be taking the trade, because one candlestick is 1 day. So you might be waiting, or you might be waiting at the wrong area to be taking a trade, and you will be taking the wrong side if you are in the bad luck and you take the position. Let's say at this point you take a buy, and market is just bleeding down. Rather than holding on to the loss, you could have just went to a lower time frame and find for some kind of reversal patterns at this area, where, let's say, currently here it shows first top and then second top and then market break. At the retest area you could have taken a sell, something like this, for example. So, and then you can ride the trend all the way down. So when you're looking at smaller time frames, you must always have one anchor time frame to look at as the major trend. That means if you're looking at 1 minute, 5 minutes, 15 minutes, you can either look at 4 hours for the major trend, because it takes 6 candles for a day. And if you're looking at daily chart, it's like the real major big move that is going to happen. Like, for example, now we see for BTC USD, it's from this point to this point, it's actually a very strong uptrend. Okay, so market currently failed to create a new higher high, so now it's going to in a retracement phase. So if you're looking at buying at this point, you'll be attempted to be wrong, because of the overall nature of the pair is in the corrective phase. Market is going up, retracing, going up, and then retracing. So you don't want to be caught in the wrong side of the market. You want to be riding the trend, and when the music stops here and starts to something like this, try to break, fail, try to break, fail, try to break, and then you can see some kind of pattern here which the market is about to reverse. So this one is going down and then reversed up. So same thing. At this current point, we haven't seen yet any levels have been broken. We will be anticipating for market to drop even lower and then try to establish, and then will go up to the high. Because this is a crypto market, it's very very volatile. So the push down can happen very quick, and what we call as the V-shaped recovery. So when you see this kind of very volatile pairs, the market may come down and retest like this and then immediately come back up. So this is still considered as a corrective phase where market did came down to this spot, attract a lot of buyers and pushed it up back again. But if we see for, let's say, stock market, you see the V-shaped recovery. So when stocks or crypto is in a very volatile state, you will anticipate this kind of movement. But in the overall trend, we are still looking at a daily chart, we are still looking at the downside. So when you know this fact, you want to go to a lower time frame and take position, you will be cautious to be looking at the buy side, because you don't know yet the overall trend for daily chart is still in the bottom. So you want to be looking at sell side opportunities. Okay, things like this is where your chart analysis comes into hand. Like, okay, you see this is a double top, this is the neckline, price broke, created a new lower low, this is your previous low, created a lower high. So now we are anticipating for the market to break this level, break down, and let's see what kind of reaction is being placed here. If the market is creating a significant low, something like this, significant low, then any pullback, we need to look at the pullback, because market, like I mentioned, can do these sorts of move and then immediately come back up. So we want to be cautious for this move. But if the market is going in like a staircase way, like, you know, like this, like this, like this, like this, like this, and then starts to retrace back, then you can take a short side and, you know, use a small risk to try and test the market first. If the market indeed starts to drop and sellers were to bring the price lower, and then you can add on to your winning position and bring the price lower until you see a major push down like this, and that's when you know that the market is about to reverse back. Because whatever is happening here is basically either market psychology, people are reacting to this price, people are panic selling, and also to consider that, you know, liquidations happening in the futures market. So when liquidation, what it means is, let's say now there is this area where a lot of people okay, let me just draw these two levels. So let's just imagine the market is at this current stage right now, and there is a lot of traders who used leverage means that they are using more than what they are having in their account. So a common leverage is, you know, 1x up to, let's say some exchanges provide up to, I think, 300x too. Okay, so 300x all is too high of a risk. But what the point of the video is, the leverage will make it such a way that, okay, if the price were to come to, let's say this level, okay, let's say this level, this around this area, those traders who maybe buy here and buy here and buy here, they will be out of their position. That means they are forced to be out of the position. So what tends to happen here is the market will liquidate them. So when, let's say, 1 million traders around here buy, and with different sorts of leverage, some maybe put 50x, some maybe put 100x, some maybe put 3x, some maybe put, so there is a variety of different people who are using leverage. And when the price is coming to their liquidation zone, they will either liquidate manually because they are scared to lose more money, or they will say, you know what, I think the market is going to bounce, you know, higher. And then what happens is market will just boom, bleed like that, because there is a lot of liquidity at this point. So some some party could have said, you know what, I know at this area there'll be a lot of people's liquidation points. You know, we may not know this actual, but some people may have a lot of bitcoins or what that they can sell at this point. They still feel that, you know, market is about to drop, then they will sell and they will trigger this, they call it cascading liquidations. This is where you will see this kind of movement where price suddenly just bleeds like that. But it's the same thing for up. When, let me just change the color, let me put green. So when, let's say, the price is up and there is a lot of sellers who entered the market with um, with thinking that, you know, I think Bitcoin is gonna, you know, drop to 50,000 or 40,000, what tends to happen is their liquidation points will be above here. And when the price, let's say, just were to a bit break beyond a certain level, the price will come like a big candlestick, and this is where all of them are liquidated. Okay, so what I would suggest and what I would see from this is, don't be risking too much of your account. Don't be using too big of a leverage to enter a position and exit a position. Always look at what time frame you're using. If you're looking at a 1 minute time frame, know that daily chart weight has a bigger weight than trading in 1 minute. So 1 minute you may think this is a downtrend, but let's say if you had have sold here, you will see the overall weight of, let's say, 5 minutes is greater than 1 minute. The weight of 15 minutes price movement, price action is greater than 5 minutes and 1 minute as it goes on. So the higher the time frame, the more weight and the more traders are present in the market and they are looking at a different time horizon. So always know what time frame you are comfortable in trading. Don't be taking a trade in 1 week and then looking at the chart every 5 seconds. It doesn't make any sense. If you want to take a trade, okay, in this day I'm going to take maybe one trade or two trades, and then I'm going to close it at the end of the day. What is the end goal here? End goal is to make maybe 2 or 3 trades. Then stick with that. Go to a suitable time frame so that the market will go in that specific time period. You will either hit your stop loss or you will either hit your take profit. Let's say, for example, this chart, you see market is going up, and then you see the market is struggling to get to a higher high, and then market drop and retraces. Let's say you take a sell position here and market were to drop and drop. So let's say you take 50%, you take your exit here, and then you take another 50%. As the market gives more reward to you, you can take profit as it goes. And once you see like a real push down and you think, you know, I think this move is over, go on to a higher time frame and look at where the current market is. Is it at the support, or is it at the resistance, or did it broke impulsively? What is the story here? So always look at it as a story. Each time frame has its own storyline that you have to respect and try to see how you can fit and try to take positions. So if you have any question, this is just like a basic thing where you need to know about time frames, what time frame is, how it works, why you use a certain time frame, why specific traders like to use daily chart, why specific traders like to use 1 hour chart. So all this is basically personal preference. They feel that, you know, at 1 hour I feel this patterns happens every time, or in 15 minutes I feel it's much more easier to trade a volatile pair, you know, things like that. So always keep in mind and have your specific trading plan. So that is another video that I'll get into soon, where how to build your trading plan, what to look for, how to write and come up with a very solid trading plan so that you'll never get deviated out of it. You'll always stick to it and follow through. That's the most important in this game, because you want to be always in the game. When you're out of the game, then there is no more anything left to do. The game is having money. When you have no money, when you're out of your position, getting liquidated left and right, that means you're not in the game anymore. Unless you have a consistent cash flow coming in for trading, then it's a different story. But if you only have $1,000, then you should have a proper trading plan to be executing in this kind of trades, because you can lose money very fast, or you can also gain a lot of money very fast. So I've learned that the hard way, where back then I didn't had any trading plan. I was just blindly taking trades left and right in futures market and losing, like, taking a very high leverage, all those kinds of mistake that I've done, and I was out of the market multiple times. So this is just one small advice, that when you're looking at trading in this kind of patterns, or even forex or stock market, if you're doing all this, remember to look for what is suitable for your trading plan. So hope this video is some kind of use and helpful for you. Share what kind of trading plan you have in the comments, and see you in the next video. Thank you so much.